Banking giant HSBC will shut 69 of its bank branches across the UK in a shift towards online banking, it has today been announced. The British multinational says it will begin closing the branches from July. The move is expected to affect the jobs of around 400 staff, though HSBC say it aims to redeploy impacted staff. Company chiefs say they will try to replace the affected branches with other banking services, such as new ATMs and pop-up banks. It will also retain a network of more than 440 branches and will not close any branches where they are the last bank in town. However, the move is expected to increase the average distance customers must travel for in-person services to around 4 miles. HSBC, which is the latest firm to announce branch closures, says the move is in response to a shift towards online banking, which it says has been accelerated during the COVID pandemic. HSBC's head of UK branch network Jackie Uwe said, "The way people bank is changing, something the pandemic has accelerated." HSBC has said it will shut 69 bank branches amid the shift to online banking in a move affecting around 400 staff. What will HSBC retain? HSBC UK will have a branch network of 441 branches, broken down in the following 3 formats: 96 full-service branches, offering a full range of services, predominantly based within large cities and towns. 172 cash service branches, supporting local communities that are more cash-intensive with a greater need for access to cash, alongside simple over-the-counter servicing and the ability to deal with more complex issues such as bereavement and power of attorney. 173 digital service branches, counterless branches providing traditional cash and check transactions using self-service technology. Our branches continue to support people with their more complex banking needs, but the way we can do this has also evolved, with the addition of banking hubs, community pop-ups and continued use of the post office network. Rather than a one-size-fits-all branch approach, it's an approach built around the way different customers are choosing to bank in different areas. The bank, which has 7,500 offices in more than 80 countries around the world, and its headquarters in Birmingham, says the move comes due to an acceleration towards customers using online banking. It says less than 50% of its bank's customers now actively use a branch network and that average footfall has declined by over 50% since 2017. HSBC also say it has seen an increased preference for online and mobile banking during the pandemic. However, the move will spark fears for elderly and less tech-savvy customers. HSBC admits the move will increase the average travel distance to its branches by 0.3 miles for customers. It means customers now have to travel, on average, for miles to get to a HSBC bank. But HSBC says customers will also be able to use the post office, within 1.5 miles of each closing branch, to carry out day-to-day transactions. The bank, which has its headquarters in Birmingham, says the move comes due to an acceleration towards customers using online banking. Pictured, HSBC at Canada Square, Canary Wharf. The move comes after Barclays closed 65 bank branches over the last 12 months. The British banking giant shut 63 banks last year, before closing a further 2 in February this year. Lloyds Banking Group also announced in November that it will close a further 48 branches, blaming a decline in visits by customers for the closures. The closures include 41 Lloyds Bank branches and 7 Halifax branches. In March last year, Spanish bank Santander announced plans to close 111 branches by the end of August 2021. It said branch transactions had fallen by 33% over the 2 years before the pandemic and declined by a further 50% in 2020. The bank also said mobile and online transactions had meanwhile grown by 20% each year, with almost 2/3 of overall transactions going digital. In November last year, the Financial Conduct Authority revealed that the number of bricks-and-mortar branches of larger banks and building societies offering personal current accounts fell by 267 between April and June 2021, leaving just 5,599 left open in the UK.